lights, camera. Oh, yeah. Oh, action. Somebody cue that wind effect. Bring it in. Bring it in. We got to do it again. It's a pep rally. It's a pep rally. It's a pep rally. It's a pep rally. All right, people, hey, bring it in. Let's get down to this quickly. I want to make this nice and sweet. A little preparation for the week to come, guys. I have full expectations for the tech sector to do a complete another melt up. There is, and the reason behind that is just the simple fact that there is institutional investors, right, who have been on the sidelines. They're vastly over leveraged in the housing market, and having cash on hands, and also having things like bonds, right, but underinvested in equities, right. There's been a lot of coverage and talks from these institutions, basically, who are in one means or another basically doing an institutional form of FOMO, fear of missing out. One, there's a reallocation that has come because they already have regulatory bodies that require them to be exposed to certain amount of sectors with a certain amount of exposure, and they're underexposed to assets, and especially the tech sector, while being overexposed to things like housing, which are one coming to a point to where housing commercial is about to collapse, which is increasing risk. So they're going to have to deleverage on some of that, as well as cash, where these bonds are supposed to run up. But the market is moving a little bit opposite of the economy, which usually how it goes. The market is 6 months ahead of the economy. So before we double tap in, we got a little bit of coverage of our AMC thing, but I found that very interesting, guys. Happy Father's Day to all the fathers out there, putting one step in front of the other, learning the markets, battling the demons of the markets, propelling your accounts for the greater being of your family. You can't do nothing. There's nothing but respect for me on things like that. Nothing but respect for all the investors, the retail investors that's in here, putting one step in front of it. Like I said, all we're doing over here is providing some good entertainment with some good education while we evolve as investors, guys. If you're trying to stay the same investor as yesterday, this ain't gonna be the place for you. Like I said, all we're talking about is things gonna make us money, as well as covering things that retail are doing. Coming up Monday, Juneteenth. Okay, yeah. Woo! Yeah. All right, but market will be closed, unfortunately, but that'll be a short week, like I said, just to pack in even more of that volatility, which I know that come that Monday is going to be something zesty. And every time I say something's coming zesty, I'm telling you it gets zesty. I'm talking about that the green sauce from the authentic Mexican food truck, hot. It's going to get spicy. All right, let's get down to it, though. I'll get a little interview from the Barons, basically, where they're covering, which we already know, the Fed is seeming like it's going to have to destroy the economy to save the economy, which we already call this the Great Reset, also known as the greatest generational wealth transfer, and it's all under play, baby. Tesla, Nvidia, Microsoft, Amazon, AMD, XRP, Bitcoin, H-bar. Hey, you cannot be in it. You can play around and try to skip out on it. Don't try to be the genius. Say, I'm trying to time the market. Dollar cost average. Dollar cost average. Don't miss the play. Don't miss the play. Let's get it.
Economic data out this week shows inflation is slowly easing. This as the Fed paused after 10 consecutive rate hikes. Where do we go from here, and where can investors find opportunity? Joining me now is Research Affiliates founder and chairman Rob Arnott. Rob, thanks so much for joining us from sunny Newport Beach. We appreciate it.
Jack,
Undercover
it's
bear.
a pleasure.
So let's start with this fight against inflation. The Federal Reserve's tool, monetary policy, is often described as a blunt instrument, but it's the only one they've got. The irony here, of course, is the Fed is using that tool to beat down a monster largely of its own making.
I think that's exactly right. If you have an organization that has created...
Mind y'all again now, that was the Feds they created, allowed all the printing of that money, allowed there to be 0% rates. Like I said, everybody's got their different views on it. I've got my view of the whole thing with the C-19 thing. I personally believe it was just a whole, the greatest money laundering scheme to take have money printed from a government agency and move it to the 1%, but that's neither here nor there. Let's get back down to it. Nobody wants to get eliminated. You already know they got aliens touched down in Nevada, whatever's going on.
A tremendous burst of inflation.
I don't want to be next. All right.
With 400 PhD economists, more Harvard and MIT together have only 100. The Fed has 400. And those 400 PhD economists can't predict unemployment, can't predict GDP, and can't predict inflation.
Back.
Now, how do we expect them to manage it effectively?
Back.
They've created it, and we're tasking
I don't
them
agree
to
with you
fix
often,
it.
but I agree with you on
There's
that.
something wrong with this picture. I look back at Vietnam War was a formative time in my life, and there was a colonel famously quoted as saying we had to destroy the village in order to save it. Is the Fed's goal to destroy the economy in order to save it? I think so. It's very sad.
And so you think there's a real danger that the path they're on will do exactly that?
Yes. One of our advisors is a fellow named Cam Harvey, professor at Duke. He's the fellow who who discovered that yield curve inversion predicts recession.
This guy talks so
He
slow.
did it in his PhD dissertation in 1986, and it was later published in the Journal of Financial Economics in 1988. So this dates way back, and his observation is that when you have an inversion in the yield curve, it tends to predict a recession with, so far, 8 out of 8 successful calls with no false
We're already
positives.
in a
That's
recession.
pretty cool. Now, my own take on it is that the yield curve inversion doesn't predict a recession, it causes one. Because in effect, what you have is the long end of the yield curve set by the invisible hand of the marketplace at the yield level that is appropriate for default risk-free debt, that is an appropriate reward for deferring consumption. Now, if the short-term yield is higher than that, think of yields as a speed bump. If the speed bump is too low, you get reckless driving. If the speed bump is too high, traffic stops. We've swung from a yield level that was too low, propping up zombie companies, leading to malinvestment and misallocation of
Key word there. Now, key in on that. Now, he's telling the truth. I don't like a lot of his opinions. Like I said, through that time period where we had, 2020, there's been the same thing that's happened over in China where there's a bunch of zombie companies being propped up. That's what you see in all these companies that are collapsing. Same with these banks that are collapsing. They were holding assets they didn't have. FTXs, things like that, to where all this was being propped up by these same markets. Obviously, y'all see that we're in one of the biggest fraud plays ever, right? All this is intertwined in betwixt itself, guys.
Resources to
Believe it or
now
not.
too high. Why doesn't the Fed pay attention to the long end of the yield curve and what it has to tell us about the appropriate level of yields?
So, Rob, I want to switch to your view of where you find opportunities and perhaps dangers in the market. You have a fascinating interactive graph on your website that we can't show on the screen in full because it would just frankly be too confusing. So I cherry-picked a few asset classes I think our viewers might be interested in. Let's start with your prediction of 10-year returns for U.S. large cap and small cap stocks. Why do you get these fairly muted returns?
It's actually very simple. The U.S. is the most.
Are you out your mind? 4.9%, you think? Is he saying that he thinks it's going to be 4% per year? Okay, all right. This guy has no idea what he's talking
expensive
about.
major stock market in the world. There's a measure called the Shiller PE ratio, which measures price relative to 10-year average earnings.
This is why I don't like bears.
So that takes out the effects of the economic cycle. You can have an economic peak with peak earnings.
Let me guess.
PE ratio
We should go into
will
buying
look
the banking
artificially
sector
lower
and
than
bonds.
it really is. And you can have a trough associated with a recession where the PE ratio is higher than it really is. And so this takes out the effects of the economic cycle. That PE ratio for the U.S. is a little bit above 30 times earnings. That's historically very high. The growth side of the market is priced at an extravagant multiple of the pricing on the value side of the market, about 5 times the valuation multiple.
Why is that?
So we have distortions
Innovation.
in the economy. I think,
guys, is it just me? Maybe I'm just insane, but you cannot ever compare innovation to anything else. Not banking, not retail, not housing. There's nothing that can compare to being able to, I don't know, make a robot, or I don't know, make a self-driving car, or make make a new form of renewable energy. There's no way to compare that to Lululemon. There's no way to compare that to, oh yeah, above 5% bump. There's no way to compare those. This just,
despite
maybe
its
I'm insane.
near certainty of massively disrupting the economy in the years ahead,
Man, becoming the richest
AI
man
has
in the
created
world
its own
in
bubble with
10
all
years,
of
and
the
y'all think there's a
AI-related
comparison.
stocks priced as if those individual companies are going to be the winners in
Jeff
what's
Bezos, all
likely
the
to be
richest people in the world are in growth.
vigorous competition over who can dominate in that
And
market.
the largest companies.
But the U.S. is
Apple, the
expensive.
largest company in the world.
U.S. value is
all right,
sensibly priced, not cheap, but sensibly priced. And international value outside the U.S. is cheap in Europe, in Japan, in emerging markets, very attractively priced. One other observation, inflation is wonderful for value stocks. So if this inflation is not put to death in the coming year, then value is the place to be.
This guy just said, first off, no. Secondly, you just said inflation is the thing that's good for value stocks. While there's a massive battle against inflation, with a curb in inflation, these guys will walk you right into a ledge.
Unfortunately, we have to leave
that
it there.
man off.
I appreciate
Cut
your
that man
observations.
off.
You and I have been talking about emerging markets for a long time. I hope your predictions come true.
Get that man off the stage, man. You Bears just make me sick. All right, let's pull it down here, guys. Double tapping in, guys. Look at my beautiful play. Like I said, guys, there's a melt up coming. Institutional investors, there's still even a lot of retail investors sitting on the sideline with their cash in hand, right? But this bull rally that occurred, right? As Keenan Graves calls it, this baby bull rally that's occurring, that's about to graduate up to, this going to skip past toddler, it's about to skip to a little teenager, right? There's headwinds behind this because institutions have to reallocate. They haven't even bought in. This has just been pressure pushed straight off, as I mentioned, retail investors and smaller middle-sized investors. These big time investors, big money, has now literally admitted through articles, and y'all can go pull these up, basically in their own words said that they don't want to miss out on what's coming. So like, as we saw with this double top that recovered, same with up here, we hit an all-time high. The stock split when they hit 1,000 with 250. Now we hit 264. I thought it was gonna be a lot more of a dump down this. Like I said, I already knew when I was calling back on Nvidia as well, where I was like, oh yeah, we're not gonna see that 350 where I had to buy it more. 426. When we was down there, y'all can go check the videos. I ain't been messing with it. I said, at this 380, I was like, hey guys, it's that 380, I might want to buy in. There, I could tell by how that thing was stair-stepping. The drops, there's too much power. And like I said, institutional is yet to come in. This is about to fling up even more. Tesla cracks through. Let me see what Tesla's at. Tesla cracks past that 265 point. Y'all, we're going to be looking up going towards 300. And we already are closed right now, 261, $4 off. I hold above that. You about to see, like, remind y'all again now, Tesla had a 13-day run before we had this little dip, and then continuation the next day after. Guys, big things are coming. Big things are coming. Tesla China starting to show inventory on vehicles in its webpage. Previous inventory vehicles could not be shown in China through the inventory page. Currently, Model S 3X can be inquired, but the Y cannot be inquired. The Model 3 can be acquired only rear-wheel drive. Guys, remember again, General Motors, Ford, everybody's now adopted them for the charging standard. They're using their chargers, this expanded grid. Now you have China and our international sales going through. There's big money coming with this EV tech AI sector, Bitcoin, Ethereum, guys. And then, like I said, let's double tap into our sweet baby play, our AMC. Like I said, nothing must have changed, guys. But one thing I have noticed is that I feel like the max pain levels come down at 516. They're clearly trying to hold the play down at 516 as we move towards this court hearing on the 29th. Double tapping in, like I want to get one little last penny after we look over this. Short interest sitting at 22.62%. Guys, it didn't get a lot of views, which I don't understand. Y'all go check out my video I released maybe on Friday about, it's called Stock Loan Substitution, which basically explains how they're able to sit up here and hold the stock a short interest at 22%, days covered 7, when it should be at 3,000% short interest. This shows by means of options and how they're doing that to be able to keep that play down. That's information because, like I said, guys, it's all about us evolving as traders. You need to know, and like I said, I'm glad to be involved in AMC and have been involved in AMC because of the simple fact that I've gained 10 years of market experience in, in 3 years. Guys, look at 700 shares available, 96.8% cost to borrow. Irrelevant, like I said, they might hit that Liviosa and bring something up, but all this is irrelevant. Unless there's short squeeze, we're all marking down on that day, that June 29th. Obviously, we have other court hearings that are opening up and things like that, but that's not going to be in time for what we got going on here. Things are getting action-packed, things are getting lit. But one thing that I must note, guys, June 29th, irregardless, like I say, there's a lot of YouTubers that are like, I'm never going to talk about it again. Guys, if AMC does something, over here, we're retail. We talk about trades. If AMC, which it will in the future, is going to have movements above $5, y'all got to understand this. Now, we talking about MOAS. I can't promise you that. But one thing I do know is Cinemark's sitting at $20. So, AMC is eventually going to climb its way back to $20. But there's ways that you can play AMC to maximize your money, or there's ways that you can be played by AMC and just be used by it, right? But that ape arbitrage, I'm gonna be playing the hell out that ape arbitrage. I'm gonna be playing the moves up, I'm playing the moves down, playing the moves with options. I'm gonna be shorting. I'm riding this thing after the 29th. I'm playing this with all the abilities and skills that I've learned. Like I said, this is a beautiful play, but this thing was even bigger than what retail expected when we came in. Everybody, oh, don't say Lou. We gonna say whenever there's a valid point, hey, we bring it up. But Lou came with a valid point. I think it was yesterday. But basically, he wrapped it up, guys. When we came in and we smashed in and shocked them, guys, what we did as retailers, we wedged in the middle of, there's a lot of terms. I forgot what the guy's name is that has the glasses on, kind of look like he'll throw you in the back of a white van. No offense, but he does look a little funny. But he does a lot of good research, a lot of good DD. But there's a lot of use of the term where they're using this as a hostile takeover. This isn't hostile. This is both planned. Just how even with Allegheny and AMC, how they're about to settle out. Guys, this was planned, and Tara and Adam Aaron are best of buds. They already had this plan in the background, and there's a possible setup for somebody that they're trying to get this price for to come through and buy this, right? AMC is the cinema hub. They're trying to corner the market. So this could have been a whole setup, right, for AMC to become that cinema hub, but they're allowing somebody else to purchase that, right? So they're bringing the price down. But what retail did is we came in and smashed in there and tore the whole plan up by setting the price up and they having to do all this debaucherousness, right? But this thing might even be bigger. Like I said, each and every day that goes by, I get astounded by how it continues to become a bigger and bigger and bigger thing. Like I said, I wouldn't change it for the world. Glad to be in this thing with y'all. Guys, we're holding steady. Like I said, the greatest generational wealth transfer is occurring right now. Do not miss out on EV, tech sector, AI. I like the chips more than I like things like C3I, but like I said, there's money to be made there. I'm just more firm right now on the chip creation as opposed to like trying to go into programming. If you did go into programming, I like Google, right? I like things like that as opposed to just C3I because like I said, there's going to be a lot of competition. It's too soon to know who's going to be the one to bring in the most profit, right? But guys, hold it down. Get ready. Hey, tomorrow we got another rest day. Get ready for Tuesday. This week is about to get insane. It's about to be intense. Y'all know it. I know it. But this is what we live for, baby. Hold on. Hey, listen. Hold on. Got a little parched from that 1800 the other day. But y'all boys knows what's next. Say, I love y'all boys to death. Much love to everybody. Like we said, much love to all the fathers. Much love to all the investors. Much love to everybody that's putting that 1 foot ahead and not being scared out of these markets. Tesla, Nvidia, XRP, Microsoft, Amazon. Y'all know the deal. Yes.